Hey everybody, Steve Olson here with the Peak Group. Thank you so much for joining today. I'm excited to present our webinar about Birmingham, Alabama area single family investment properties. I've been encouraged by my colleague Levi to turn the video on for this one. I got all dressed up for you. I'll do my best to behave. I think this is going to go 25, maybe 30 minutes tops. We try to keep these quick, knowing that it's a weekday and you all are in the middle of everything. You're in the thick of it. So we'll do our best to be respectful of that and get it done for you as soon as possible. Um, so we'll go ahead and put any questions that you have in the chat, and I'll do my best to get to them at the end of the webinar for you. And then from there, I'll just admit people as they kind of come and go. Sometimes that I still haven't figured out how to enable that feature where they're automatically admitted. So if you had to wait to get in, my apologies. I get talking sometimes. So yeah, once again, my name is Steve Olson with the Peak Group. Happy to have you here today. We're going to talk about Birmingham, Alabama area properties. And as always, please consult with your legal professionals on any of these items, your tax attorneys, lawyers, CPAs, property managers, whoever, right? This is our take on things. We think it's right, but do your best to verify it. It's investing, and investing has risk. So those of you that haven't been on a webinar with us before, the Peak Group, we are a GC and property manager in Dallas, Fort Worth, and in Birmingham, Alabama, now in Savannah, Georgia, too. We just opened that up, and we have a couple of strategic joint ventures elsewhere. And it's really designed to give you a soup to nuts solution for investing in real estate. You can live in California, in Hawaii, in New York, in Saudi Arabia. Yeah, we have a client in Saudi Arabia, and invest in these properties. But what people love about it is it still gives them full control of the properties themselves. So you're not like a limited partner in a fund where you're kind of at the behest of the general partner as to when you sell, as to when you refinance, when you do any of that stuff. You control the deal, but we do the work. That's the idea. And so you can absolutely do it from afar. I own some of these properties myself, and a number of them I have never seen, let alone entered. So it is possible. So the Peak Group, we identify these land opportunities, we develop them, we go for high growth markets that are landlord friendly. Our team manages and does all the leasing and tenant placement and rent collection for those properties down the road for you. It takes probably 2 minutes a month, most months, for you to kind of manage the manager, so to speak. Look at your statement, see if you have any questions about any bills that came through, and check your bank account to see if you got your rents. Some months when it doesn't go right, it might be 5 to 10 minutes when you have more questions or there's a slightly more complicated situation. But you're not the one to be on the front line to deal with that stuff. More than likely, in fact, I can't think of a situation where this would happen. Your tenants don't even know your name, don't even know who you are. All right. So the management takes care of that side of it, and PCG, Peak Construction Group, builds the properties. The majority of the properties that we do are brand new construction. Many of them are build for rent communities where there are a number of rental properties there. Some of them are scattered site communities where we pick up lots that we think are good strategic locations. And that is what we're talking about today, is some scattered site options in the Birmingham, Alabama metro. But I always like to give a kind of a comprehensive preview. It doesn't hit on everything, but here's what else we're up to, right? If you're in the market for duplexes, you want to be in one of the fastest growing markets in the country, Dallas, Fort Worth. Take a look at our East Powell duplexes. This is in a federal opportunity zone, an area that's going through a lot of redevelopment. It's only 5 miles from downtown Fort Worth. It's only 4 miles from Medical City, which is a giant hospital complex there in Fort Worth. We've got a couple that'll be done in the next 45 days. Tenants starting to move into this neighborhood, which has been under construction for a long time. That's a long story. And like I alluded to before, Dallas-Fort Worth, soon to be the third largest metro in the country. It's projected to pass Chicago sometime in the early 2030s. People just keep moving in. You will not find a more affordable duplex in all of Dallas-Fort Worth, at least a brand new one. We sell them at $389,000, 6.2 cap rate, and we get you that 4.99 interest rate on the forward commitment on a 30-year fix. So good way to enter multifamily. If you're looking to go a little heavier, a joint venture, and I kind of say that liberally because I'm one of the development partners, look at us up in Fort Wayne, Indiana, a big new fourplex, triplex, and duplex subdivision that we're building there. Really high cap rate on this one because it's pre-construction. So you close on the land and we build, and it has a tax abatement. So there's an incentive from Allen County, Indiana for us to build these. We've just started leasing in there, and we have a couple of duplexes and triplexes left that can start construction over the next 30 to 60 days. Construction takes about 8 months from when you close. So the process on that one is a little unique. Make sure you get in touch with us and we can walk you through that. Last week, if you were on with us last week, we talked about our brand new market, beautiful Savannah, Georgia. New single family homes. We just released the first batch of 7 of them. This is in Rincon, Georgia, 18 miles from Savannah, so close enough to participate in the Savannah economy, but not right on the ocean for that higher hurricane or storm risk, which can happen in some coastal communities. We've got a 5-point rate buy down in there. When we did those pro formas originally, that would get you to about 5.375. Then bombs started dropping in Iran and everything went haywire. I think it's more like 5.75 now. But today I got the news on over here. The 10-year treasury is down. Rates have calmed down a little. So just be in touch with us and we can talk you through where 5 points will get you on that. But this is perfect for single family rentals. This is the 4th largest container port in America, right? There's tons of jobs there, and it has a 2.8% unemployment rate, right? Lots of logistics and military and manufacturing, and a great place to go visit if you haven't ever visited it. We sell those single family homes at $275,000 a piece, and that pencils out to a 6.7% cap rate in the first year. It'll go down to low 6s in the second year because that's when we phase in the vacancy rate. We use a 5% vacancy rate, but we don't put it in the first year because the property is sold to you with a tenant in place. So let's talk about why you should do it, right? We are looking for real estate investors, not retail investors or not property flippers. People who want to put their money to work. One of my favorite quotes is by Warren Buffett, who said, if you don't learn how to make money while you're asleep, you'll work for it until you're dead. And that's the idea here. Put it in a property that'll make you a little bit of cash flow every month, that will see growth over time, give you tax benefit over time, and it just compounds on top of itself. These are not typically properties that we put on the open market. They're only offered to our clients here at the Peak Group. And as I had kind of alluded to earlier, they're streamlined for an out-of-state investor, somebody who lives far away. Maybe you live in a market that isn't very landlord friendly. Maybe you live in a market where you pay so much money to get just a little bit of rent and you're looking for something different. I think that the Birmingham, Alabama metro is great for you. Landlord friendly, low cost compared to the rents that you can get, low property taxes, and low insurance. So here's a few other details on why we think you should enter the Birmingham market. And, over on the right is a picture of one of the houses we just completed. The window stickers are there. We spruced up the lawn a little bit with some AI. Gotta love that. It's not that green yet, just barely sodded the property. But Birmingham delivers these strong returns to investors because this is a market, like I said, where the rents are strong compared to the price. Nearby markets, big ones, I'm thinking like Atlanta, Tampa, Nashville, big A-class markets are very expensive compared to Birmingham. We really believe that we'll continue to see a flight to affordability as people want to be in the southern United States, but they want something more affordable. Birmingham is still comparatively very affordable to some of those other markets. You've got a very, people associate Birmingham with an old steel town that's bankrupt. And it used to be an old steel town. In fact, you can see some of those mills and they're waking a lot of them back up again. Those are getting retrofitted and repurposed for new steel manufacturing or other manufacturing. But Birmingham is much more than that now, right? We're talking a lot of healthcare, University of Alabama, Birmingham, big hospital system there, a lot of logistics and industry, even finance. And I'll show you some of those later. Supply is still really catching up in Birmingham because it really didn't blow up like some of these other markets did, especially during COVID. We're picking up these scattered lots, vacant lots over in Pleasant Grove, about 15 minutes west of downtown Birmingham. Just nice suburban area. There's a screenshot of where one of them is. You can see homes just kind of popping into the neighborhood here. And, we're near major corridors, I-22, US 78, quick access to a lot of the other parts of town where a lot of the jobs are, while still being in the suburbs, so your kids can be in a good school. You can rent that single family home. I made this map, right? It kind of shows you where the project is located compared to some of the other major centers. This doesn't cover it all. It's just kind of a high level, right? We're 15 to 20 from downtown, depends on what part of downtown, right? You're not super far from the Amazon Air Hub at the Birmingham Airport. They've got an Amazon Air Hub and they drive lots of jobs and ship a lot of product out of there. Lots of big manufacturing in the area. You can see on the map Mercedes-Benz down on the bottom left. That's over towards Tuscaloosa. The map is a little misleading. I apologize. It should be a little further down there. So you're going to take the 20, probably 10 more minutes beyond where you see that icon. Smucker's, a brand new plant. Smucker's, they make jams and jellies. With a name like that, it has to be good. That's their that's their saying. UAB has a big hospital down there. You can see over in Pleasant Grove on the side. That's where Peak is near U.S. Steel, Home Depot. I put Publix on there so you can see tenants have places to shop. You're probably 10 to 15 minutes from Target and Costco. They're on the south side. And then you can clearly see where downtown is, right? That's where the cluster of everything is. Big hospitals, big medical, right? All kinds of things related to that. Baptist Health, Children's Hospital of Alabama, Protective Life Insurance, Regions Bank, Southern Company is manufacturing, the city of Birmingham. Those are just a few. And then up on the north side, we're probably 45 minutes from the Honda plant, right? Honda makes a lot of cars in the state of Alabama. So you can see the logistics, the finance, the medical, the government, as well as all of the local shopping and retail that tenants would need to have, all located there in Birmingham. So I talk to investors a lot who wonder if they should invest in single family. I kind of think that if you want to invest in single family, which is an excellent springboard to get into real estate, you should invest in new construction. And you can see here, it says these are built in 2025. A couple of them are. We just finished them at the end of the year. We've got a couple of others that just got their certificates of occupancy, and they are 2026 builds, right? So there's a couple of those too. They're modern layouts. We go for that two-car garage with a two-car driveway, right? Go for that nice finish inside, because anytime you're going to charge rents close to $2,000, you got to have it, right? Those modern layouts, and you put as much LVP flooring throughout the property as you can. That keeps your maintenance down over time. Generally, you want to put carpet on the stairs and in the bedrooms. Tenants usually want that or expect that for the most part. But one of the better things is a builder warranty, right? It's easy to assume that, hey, this property is brand new. I'm never going to have any maintenance problems, right? That's not necessarily true. It is for the most part, but you think about it, you take a piece of land and you bring in sticks and bricks and pipes and wire and you assemble all this together. There's kind of a break-in period for somebody to live in that property. And it's great to have that break-in period be when it's on the builder warranty. When it's all fresh on the sub's minds, the materials are all there, these repairs can be made, and you break that property in, and it generally runs very smooth, very maintenance-free for a long time. So you can see a little bit more. We've got a couple of properties on 4th Avenue in Pleasant Grove. We're about to roll one out that is on 10th Avenue. Get a little bit more rent even on that one, so you can inquire about that. They're just under 1,600 square feet. Finished construction in late 2025 or early 2026. It kind of depends on which one that you're asking about. But I'll tell you, and I've said it before, and I don't mean to belabor the point, but I'm going to. Two-car garage on single-family homes in the suburbs. We got to have that two-car garage. That's what tenants want to see, because as much as you put 1,600 square feet in there, people have stuff, right? We all have stuff. My family, we're potentially going to be moving this summer, and we've been taking stuff to a storage unit to kind of clean it up for the listing. And the whole time we're going, what is all this crap? We all have it, right? And so tenants, a lot of times they might park one car in the garage and fill up the other side with stuff and put another one in the driveway. Then you still have room for guests to show up. This really makes a difference when you're renting out properties. When we do new build for rent communities of townhomes and such, people always complain about parking, right? You could have 7 stalls per unit. Somebody's going to figure out a way to complain about parking. A lot less likely on single family homes in the suburbs when you do these 2-car garages with 2-car wide driveways, right? Really helps your vacancy over time. You can see some shots that we have of a staged unit here, right? What these units typically look like on the inside. And yeah, when we go through leasing, we typically do stage one of these, but we're going to go with granite tops. We're going to go with white cabinets and stainless appliances. You can see in the kitchen there, that's LVP floor. Like we like that in the high traffic areas of the home. That people are dragging tables, the dog is running, spilling. We want that durable flooring that is moisture resistant and impact resistant to make it over time. Carpet in the bedrooms is kind of a necessary evil. People want that. And so you're going to change carpet out periodically, but luckily it's on a very small amount of square footage for the property. You can see we're featuring these 2 properties on 4th Avenue. We just brought another one, like I said, on 10th Avenue that you can inquire about. A little bit higher rent, but a little bit higher price on that one. It's $270, but it rents for $1,900 instead of $1,850. So you can see that on this one, you need about 71 grand to get into the deal. It's assuming a 25% down payment. I made an error. The cap rate is actually 6% on the property. You'll get in the high 100s on your positive cash flow. A lot of this depends on financing. I encourage you to get with us to talk to JT Lindsay, our preferred lender, because the world is crazy right now. Those rates are moving around a little bit. You can time those rate locks. You can make the most out of those 5 points that we have allocated. I did make the correction on this screen, as you can see. So we love to help clients run pro formas and do the numbers, sometimes based on some rate buy downs, on putting more down or less down. We can move that cash on cash figure around, right? And we can make the return more attractive. Other times you're saying, I just want more money into this deal. I'm less concerned about cash flow. I just want inflation to hammer away at my debt, right? When we have inflation, which we do, and you have a fixed rate of interest on your debt, you're winning, getting way ahead just because of that, just because of borrowing money on a true 30-year fixed rate debt. So we had this is the other one, 265. I'm not going to spend any time on it, but you can see what happens over time. It costs about $550 a month to run these properties. That's in your management, your taxes, and insurance. I love Birmingham for investors who just want to have a couple of homes, or maybe you're early in your investment career, because one really great thing about this is if your property goes vacant in Birmingham, which it will at some point, not for super long. We lease them pretty quick over in Pleasant Grove, hence the $1,900 a month in rent on the new property. When you get a bunch of applications, the market talks to you and you say, we got to raise rents. But when your property is vacant, it's very cheap to maintain. That insurance is low. We're far enough from the Gulf that we're not paying those hurricane insurance rates, right? Our property taxes are extremely low in Birmingham, so it's easy to carry the property. It's more forgiving over time, right? So you can see how it all breaks out. That insurance is an actual quote. The management is based on our typical management fee. And we're telling you to allocate $440 a year. Just set it aside for maintenance. Probably won't need much, if any of it, for the first few years. We've got security deposits we can jump on if a tenant is property. In the pro forma, and you can request a copy of it, we increase the expenses at 3% a year, just to take into account for the fact this property is going to get older. It is going to cost more to do maintenance as we get down the line. So love to buy new construction, but have to be honest about it that it's not going to be new forever. So we increase those expenses. So you can see you start to really generate some equity as you go 5 years in. I love holding brand new single family homes for 5 to 7 years, because if you hold them for that long, you've given the market enough time to do its work. See some appreciation, see some principal pay down, see some rent increases, right? But also, you haven't hit that phase where some of your mechanical units start needing heavy maintenance or replacement, right? Where dishwashers or water heaters or air conditioners or even roofs are starting to have problems. Typically, a roof would last much longer than that. But the property is still considered to be generally pretty new, so you can sell it to another investor. We can always help you with that. You can put it on the open market and sell it to an owner occupant. That's always a great exit strategy, especially if we get into a low interest rate environment, because people are looking for these kinds of things, these entry level homes. When rates really come down, you usually see a flurry of buying activity. And so, like I said, if you sell right away, right, remember, you haven't had much market gain, you haven't had much principal pay down, you got to pay brokerage fees, whether it's with us or somebody else. It's your property. You can list it with whoever you want. And you got to pay closing costs. So if you sell after the first year, you're going to lose money, but keep it for 5 to 7. I think that's a sweet spot. Do what you want, though. I've held them for longer myself. And you can see that, right? I think if you could just go pick up properties and have a cash on cash return of 8% in the first year, everyone would do it and that opportunity would go away. That's just too good. The magic in real estate and being a passive investor is holding the property for a period of time and letting the market do its work. You can see our cap rate begins to improve, our rates begin to improve, especially in year 3, it starts to tick up. Year 5, it really starts to hum for you, right? We don't have the total rate of return on here. It is much higher. Kind of depends on your metrics, but you can see your internal rate of return, IRR, is negative that first year because it assumes that you sell and you got to pay those brokerage fees. But IRR accounts for all your cash flows over time, your principal pay down, but also time value of money. So you can see IRR kind of agrees with what I'm talking about. It peaks in year 10 and then starts to go down. The premise being hey, you want to be in investments for a medium period of time like this because you can go invest into something else. So time value money, there's a financial formula associated with that we won't bother you with today. But if you're a finance geek, you already know what it is. You can see how your cash flow improves time. I talked about this on the show last week for Savannah that we did. I'm refinancing a duplex right now in Indianapolis that I own, and I bought it in 2018. And every year I've had modest rent increases of $25 to $50 per unit, right? I've had my principal pay down, I've had my equity gains. I'm pulling $100,000 cash flow out of this. I'm taking my interest rate from 4.75 to 6.5, and I'm still going to be positive 250 a door. I really let that thing cook. And now we just refi, we pull the money out tax free, we go do more properties, we get depreciation on those, and we snowball this. But you have to let it happen, right? If you're jumping in and out of these all the time, you're not letting them take hold, you're not letting the market do its work. So we told you before, we've got the full service property management for you in place. Heaven forbid you evict a tenant, you're not the one going to court. You're not the one dealing with that situation. That's us. You're not the one reading credit reports, although we can share that with you if you want to. You're not the one calling old landlords and references. We qualify those tenants. We collect that money every single month. We pay the vendors if there's repairs, right? And we give you a report via Appfolio that you can pass on to your CPA every year. Makes doing your taxes super, super easy, right? So it's all managed on your behalf. Now, I told you 25 to 30 minutes. We're about there. This is what you do if you want to talk about the properties in Birmingham. You can scan the QR code, put your info in. We'll be in touch to set up a time. You can reply to the email that you got to advertise this webinar, but we can show you available homes, homes that are in the pipeline, run scenarios on leverage, all that kind of stuff within the software. Or we can even talk about some of the other properties that we featured at the very beginning of the webinar. So that I'll leave it actually on that screen. And sometimes I get emails before, people watch this live, people watch it recorded. There's a couple of different ways that they do it. And one of the questions I got, I always like to address this one. If you go poking around, you can find some nasty crime data about Birmingham, right? Another city where that happens a lot too is Memphis or Atlanta. And yeah, that's absolutely true. I would add, though, however, when it comes to Birmingham, we're talking about Birmingham and not specifically downtown. There's a couple of pockets around Birmingham that have high crime. We are in the suburbs with good school districts, good police forces. Tenants want to live in our neighborhoods. We're not doing C-class properties in the high crime neighborhoods, but that's something that you can find if you poke around a little bit. So somebody asked me about that, and it really just depends on the neighborhood, and that's not where we operate. We don't want to manage properties in those areas. Another one asked about rents. How do you know what the rents are? Well, at first, when you go into a market, you got to find out what they are. You pull comps. Over time, as you build, you know what the market will bear, and you listen to the market. You know, we just released a property about 15 minutes south of here in Hueytown in one of our build for rent communities. We got a bunch of applications on it before we were even done cleaning it. That's the market talking to us. So when you own these properties and a tenant is up for renewal, or maybe a tenant is moving out and it's time to find a new one, right? We will have that discussion with you of, hey, here's the comps, here's what we're seeing. We recommend that we push the rent to 1925, right? And you'll give us the approval. We'll go out there and work on it. Maybe we get one at 19, maybe we do a little better, but we're always looking to optimize that, right? If your tenant's moving out every single year, that's not quite right. That's expensive, right? If they're never moving out, your rent's too low. You need to push that a little bit because you know what? Your insurance and your taxes, those things go up over time. So should your rents. And so we're pretty good at helping you manage that process and getting you the market data so you know when to go grab more money on the table versus when to let things ride. So that being said, you're welcome to put any questions that you have in the chat. Or you can, I think we've got the audio on for everybody. You're welcome to chime in and ask any questions. I've got one more that I'll get to in just a minute, but we'll stop being so long-winded and give you a chance to ask questions for just a second. Anybody have any questions they'd like to ask? Okay, I've got one that came on my email. Um, and then, so if you are live with us and you want to ask a question after I answer this one, is going to be your time, and then we'll wrap it up. But a question about insurance. Somebody had heard that insurance is expensive in Alabama. Well, yeah, down on the Gulf it is, the entire Gulf. I mean, I have property in Houston, and it's outrageous. Now, insurance on single family homes is easier. When you're insuring duplexes, triplexes, and quads, that can be a little more iffy, a little more expensive depending on the area. But Birmingham is hours from the Gulf and is far enough and is not really in that risk zone for hurricanes, and so that they don't have a crazy draconian insurance rate that they charge up there. So I think it just really comes down to deductible. We can put you in touch with the rep that we use, run a couple of scenarios, but the quote that I gave on here with our pro forma is an actual insurance quote. And the person asked too, along with that, well, what about tornadoes? Yeah, they can get tornadoes in Alabama all through there, Arkansas, Tennessee, Alabama, Mississippi, Oklahoma. That's kind of tornado alley through there. But I'll tell you the funny thing about about tornadoes, and I've lived in the Midwest before, they don't really show up in insurance prices because it's a very spotty, random event, right? You know, like an earthquake or fire or flood. It takes out big areas. Tornadoes, they do typically take out smaller areas at super random times. And so we don't see that show up. It's typically covered. Make sure you ask the insurance agent if there's any riders that you can put on there if you want to, because they can happen in the area. But like I said, millions and millions of people live there and they're not worried about them, and people still want to rent properties. Insurance companies still want to write policies. So everybody, I told you 25 to 30 minutes, gone on questions before we hang it up. All right. Well, we will post the recording to the site. We will send it out to everybody. Thank you for joining us. Just reply directly. You can send an email to real estate advisors at the peak.group or scan the QR code, and we'll get in touch with you, answer your questions about Birmingham or any of the other projects that we talked about today. Thanks again for joining, and have a great day.